All right, so I got a red day recap here. We're going to go over Euro CAD. So this was a long play. As you can see, I placed it this morning in my free Discord chat room. Link in the video description if you want to join it. 100% free. There's no catch. You just click the link in the description and you can join this free chat where I post my charts, got educational material, all that good stuff. Okay, so you can see this morning I posted Euro CAD in here. I said sitting on 1 hour bullish order block at the moment, which is that right there. That's your bullish order block. I would like a dip down into the 80 level though, so I wanted a little bit of a deeper retracement. I got it, so I need a bit more. See that where I indicated I wanted to see it trade down into that imbalance once more, down into our 80 institutional price level. And I said there's your fair value gap confirmation after the liquidity run. Did tap it once this morning, which was like right here. So it tapped it once this morning, then you had that nice rip up. But I figured it would want to tap down into it again here with the institutional lever there. And yeah, so that was the reason. And I did take a small L on it. Now it wasn't a full L. You can see right here is my P&L. So, and I'll tell you why I ended up cutting it premature. So, all right, so you're okay. Let's clear off the chart and let's start from scratch. So on the daily chart, what's the trend on this? The trend is 100% bullish. Okay, market structure is bullish. It's consistently grinding up, consistently putting in higher lows, consistently tagging previous day's highs. So it's very, very bullish. Okay, so we're trading with the overall trend since I did long it. All right, what about the 4 hour? 4 hour, it's kind of the same deal here. There's nothing too interesting here, but it is operating within a bullish market structure, completely bullish. The trend's bullish on it. And we're starting to curl up here. As you can see, we put in a swing low level and now it's starting to tag these highs, tag these highs, tag these highs. So it's operating within a bullish market structure. The same deal on the 1 hour this morning. So you can see this is midnight New York. If you look at my cursor, this is where we opened up at this morning. Then what happened on Euro CAD, it came down. This is what we would call our Judas swing. So it came down and it took that liquidity. See that right there? See how it came down? It took that liquidity right there. And then what happened right after taking that liquidity? You get a nice big move to the upside, shift in market structure, and this is your order block. See that? That is your bullish order block, okay? So this morning coming down into New York, we had that nice move up. Originally we had that nice move up higher, then it topped out right here. It pulled back into our New York kill zone, and then I had the 15-minute. So on the 15-minute chart, I want you to notice this. See this right here? See that imbalance? Now this actually gave a really nice play during London session. So you can see right there with the tap down into it. If you're awake during that time, for me, that time zone for me doesn't work out. New York time zone works better for me. But that was a really nice setup this morning as well. Once it tapped down into that imbalance right there, then it had that nice surge up higher. But I grabbed it. I grabbed this morning as it was coming down into New York kill zone, which is 7 o'clock a.m. Eastern time. All right, so we pulled back, but that was the reasoning. Okay, again, the daily chart, market structure is bullish, and 4 hour bullish, 1 hour we come down to this order block right here, and then here it is on the 15-minute as well. That's your bullish order block right there. All that is one order block, and then you have your imbalance in there as well. That's your confirmation after the liquidity run. We had that imbalance created. Okay, and so yeah, that was that's what I liked about it. So I grabbed it as it came down into that level off the 80 institutional price level. Remember, what are our institutional price levels? The 00, 20, 50, 80 institutional price levels. Boom, right in there as well. So I grabbed it and my stop was right here. That was my original stop. Like I said, I ended up bailing out premature, took a smaller L. But even if I did take the full L on it, it was still good risk reward. Had about a 2-to-1 on it. So I was targeting, this was my PT. Hive day. I wanted to target the buy side liquidity above hive day. And actually, I still think it's going to hit it. So I do think it's going to hit it. And it's starting to curl up here now. It's looking really strong. And if we didn't have news coming out at 8:30 a.m., it's medium impact news, but I'm still not going to risk it. But if we didn't have 8:30 news, I would be jumping back in this here pretty soon. I would be jumping back in it, looking for it to target the hive day here, because I think my thesis is correct still. It's still bullish overall. I mean, market structure is bullish on our larger time frame. Everything's still pointing to the upside. I just missed time to play, and that happens. Okay, you're not going to be perfect all the time. I'm not perfect all the time, and that's just part of it. Just like yesterday, I was green yesterday, and my first trade of the morning was an L. Again, it was due to news. Repositioned myself because I thought my thesis was still correct. Everything was still pointing to the upside. It was just a fake out, and I was able to capitalize on that move higher. So I think that's going to be a similar case here pretty soon with this Euro CAD. But I'm going to be content with my week. It was still a great week overall. But yeah, so where did I end up bailing out on this at? Because like I said, I didn't hold out for a full L below low of day right here. So I grabbed it as it popped back up into that imbalance. So this is something that I've studied and I've noticed in my back testing in my chart data. And I noticed it quite a lot. It's a recurring pattern. So as I've said before, my best plays, they usually go quick. They respect their levels. And it doesn't take them long to hit PT usually. So like it'll hit the level. It won't spend a lot of time chopping around. It'll hit it, respect it, and then it'll start making its way up higher. Okay, a lot of this type of crap, I don't like that. But there was also something else in here. The fact that when it doesn't respect the fair value gap like that, see how it closed below the fair value gap? That's not good. You don't want to see that. And a lot of times when a fair value gap is broken like that, what you'll notice many times is it'll pop back up into that fair value gap and reclaim it as resistance. That's something that I've kind of got from my studies lately in my back testing. It's one of those little new things that I've kind of picked up and I've noticed it. Whenever you get something like that where it closes and it doesn't respect it, a lot of times you'll see it pop back up and reclaim it as resistance. And that is exactly what happened here. So I saw this coming down. I figured, hey, it's probably I was wrong or my timing was wrong. Again, I still think my overall thesis on the direction was correct, but my short-term timing was incorrect on it. And I figured we're going to tap this liquidity, this sell side liquidity pool here first, and then it may ramp up higher, which it is right now. But as soon as I saw it close right here, I said, hey, that's not good. Let's look for the door. Okay. And even though I really don't like going lower than a 5-minute chart here, or I mean a 15-minute chart here, if we go to the 5-minute chart, I want you to notice something. See what was created on the break of that larger time frame fair value gap, that 15-minute, it broke and created a 5-minute bearish fair value gap. See that? And then notice what's inside that bearish fair value gap, your previous short-term level of support, aka a swing low level inside of that 5-minute fair value gap. I know that some of this might be going over some of your heads here, but watch it back and really listen to what I just told you, because this is something that I've picked up from my most recent studies and it's really important because it allows you to minimize your risk even more, to make those losses even smaller, to allow you to play even better defense than you were before. So again, that 15-minute close below that fair value gap, and that told me that it did not respect it. And then I went down to a lower time frame, which I don't do often, but I went down to this time frame to get a little bit more precise. And what did I notice on the 5-minute? We had a bearish fair value gap created through the break of that level. Okay. And then you get your swing level inside there, which is your short-term level of resistance. Okay. Now, and where we probably headed at this point, look at how close it is. And at that point, after I saw that close, zero respect, I knew it was going to target this sell side liquidity pool. Okay. I knew at that point it was likely a wrap for it. Okay. So at that point, I was looking for the door, and what did I end up doing? As soon as it popped up into this bearish imbalance right here, I cut it. I was done with it, and I took the L on the chin. Okay. Again, it wasn't a full L, small L. I'm content with it. I'm happy with that. I played really good defense. And yeah, so that was how it went down. And again, I still think it's going to tag high day here pretty soon, but I'm just going to hold off on it because of the news coming up. But yeah, what's the general lesson from today's lesson? What's the general lesson today here? Again, I share with you something else that I've picked up from my most recent studies, from my back testing, is the fact that when you have something like that where it doesn't respect the fair value gap, because the fair value gap is serving as support originally. That's what I wanted it to do. I wanted it to serve as support because it's an inefficiency, feels like inefficiency, price is efficiently delivered, and then we want to see it ramp up higher, right? Well, whenever that doesn't happen, whenever it cracks that fair value gap, many times you'll see it, as I've have with my back testing. Is why I've seen it in my back testing so much. I've seen it in my chart data. Whenever that fair value gap is broken, many times you'll see it get turned into resistance. Okay, and that's why I utilized the lower time frame here. I saw, hey, we got a bearish fair value gap created on the break. Once it taps up into that, okay, because that was our short-term draw on liquidity right there. So I figured it's probably going to want to, it doesn't have to. I mean, it could have just sold off and I would have took the full L and still been happy with my trade because it was a good setup, but it did end up drawing up into that and it allowed me to cut it short and play good defense. So yep, that was the trade today. I mean, we can't win them all. We were going to take losses, such part of it. But when we take those losses, what's the important thing that we do? The important thing that we do is we manage risks. Okay, because it was a good trade overall. If I was correct on it, I would have made around 40 grand or so, something around that. And even if I had my full stop out point, that would have been around a 20 grand loss. So, I mean, still overall, it was a solid trade, solid setup, even if it hit full stop out point. But because I utilized something that I've learned recently in my back testing, the fact that that fair value gap wasn't respected, that it was taking too long, that we had our lower time frame confirmation fair value gap to the downside, it allowed me to cut down my loss quite a lot. So hopefully y'all found this useful. If you did, make sure you leave a like, you subscribe to the channel, and I'll keep that content coming. And also one last thing, again, if you didn't listen to me earlier, link to the free Discord chat is in the video description below. Make sure you get in there. I got tons of educational material, and you have tons of other traders that you can connect with, that you can share your ideas with. So yeah, make sure you get in there.